You know what time it is. Money, power, politics. Stocks took a break from yesterday's rally as investor optimism dimmed and oil climbed higher. But futures are already back into the green tonight following that New York Times report we mentioned that the U.S. has sent Iran a 15-point plan to end the war. That is according to two officials that were briefed on the diplomacy. My friend Dan Nathan joins us now. He is a CNBC contributor and co-host of the Risk Reversal podcast. And Rohit Chopra is back, former director of the Consumer Financial Protection Bureau and a key advisor to Democratic state attorneys general. Okay, Dan, the Strait of Hormuz has been closed for almost 3 weeks, and the price of oil is still only around $100 a barrel. So could one say that whether it's Trump's showboating or jawboning or BSing on some level is kind of working? Because given the amount of oil that's flowing through the Strait of Hormuz, it should be way higher than that.
Yeah, you could also make the argument with this sort of 15-point plan that it could be a lot lower. You know, if you think about going back a few, 2 months or so, it was trading at $55 a barrel, right? And so in the lead up to the hostilities, we got to about 65, 70. So, you know, I think about oil and I think about like what sort of risk premium should be embedded in this, you know, commodity, right? If you think about how important it is, and we've just figured this out over the, you know, the Strait of Hormuz being closed, the fact that the Iranians say that there's certain ships that might be able to kind of flow through there right now, I don't think that's going to put too much downward pressure right now on oil because, again, we just don't know how this is going to shake out. You know, the tariff situation last year, you can cancel tariffs, right? You can kind of make the case.
Okay, this is the best point. Make this point.
Well, you can basically talk about the economic impact of that. If you cancel the tariffs, there's going to be some psychological impact that might happen, right? But it's not going to kind of put a risk premium. Let's say it was in the stock market at the time, and we did see the stock market crash. He does the taco, they cancel the tariffs, the economy just keeps on chugging along. This situation, again, it's so multifaceted, right? When you have this sort of reliance on this one choke point, but it's not just for oil, it's for a whole host of other things. So you kind of disrupt supply chains like this, there's going to be reverberations for months, if not maybe into next year.
You also need both sides to say, yes, let's put our pencils down, right? In the case of the tariffs,
cancel war.
But that's my point. In the case of the tariffs, everybody wanted them canceled except Donald Trump. This one is a different story. Rohit, I want you to weigh on this because even if he keeps the price of oil down, if the war ends tomorrow, the damage is still out there.
Well, let's just be clear about the two economies here. I think Wall Street knows that the president will chicken out if it really comes to big increases in the price of oil. But let's be clear, just like tariffs, the effect of this happens over time. There's a lot of talk now about all these tax refunds people are going to get. It is going to get wiped away by the $4 cost of gasoline and the increases in prices that people are paying from the tariffs, Stephanie, that were announced in April. So people are paying for it and people are mad. I think the president knows it, but a lot of the problems haven't even come yet. There are projections that people in May will pay $4.35, 40 cents a gallon. Let's see how it plays out. But right now you see a consumer that is getting more on a treadmill, borrowing more just to get by.
Rohit, the national average for a gallon of gas is nearly $4. We've seen the state of Georgia pause gas taxes to help drivers. If other states do the same, could it provide real relief?
Well, let's see. I mean, I am actually very worried in general about price gouging in the times of these sort of price spikes. We saw how a number of manufacturers, big manufacturer of consumer goods, raised prices because they thought it was opportunistic to do so. They could blame tariffs. They wouldn't get the damage for themselves. But the political damage for those in power, we saw the Biden administration. I served in that administration. When they don't take active action to combat these price spikes, there is revenge in the democratic process at the ballot. And I think this is what the president is really gambling with.
All right. Speaking of gambling, I want to talk about prediction markets. And we do have to note that CNBC, our sister company, and Kalshi have a commercial relationship that includes a customer acquisition and a minority investment. I say it all the time, Kalshi seems to be in business with everyone, and now including us. Now, investors, as we mentioned, the stock market might be excited about the war hopefully winding down, but prediction markets bettors are saying the opposite, right? Kalshi users are betting against the Strait of Hormuz reopening over the next few weeks. This is not the first time we've seen Kalshi and Polymarket used like this. What is your take?
Right. So we've talked about this for a long time. I mean, some of the insider trading that's going on in and around policy, right, and in and around short-term sorts of events.
It's extraordinary.
It's extraordinary. And I think you kind of jumped on me once. I think it was like a year ago when I said no one cares. And you're like, no, people do care. I mean, no one cares. No one's going to fix this. No one's going to go after it.
Well, no one in this administration is going to fix it.
So when I think about prediction markets, these are like really brand new for all intents and purposes relative to a lot of the, sorts of instruments that people make or express views in the market. So here's all of a sudden this new product. There's lots of different regulation, the way, let's say stocks and bonds and all that sort of stuff trade. The concern I have is they serve a purpose. And I think that a lot of folks pointed to the election in 2024, that they were more accurate than a lot of polling. And we're going to see how that plays out. But it's also the sorts of markets where people are committing capital to. And I think that's one of the really important points. One of the things that backers of these products, kind of suggest that if you are betting that there's a 30% chance or only a 30% chance that the Strait of Hormuz is going to be open by June 1st or something, you got to put your money where your mouth is, right? My concern is that there's all sort of incentives to spoof these markets, right?
Yeah.
Especially for political sort of reasons. You can kind of go into a market where there's not a lot of capital committed, and you can move the market, and you can basically, I think in many ways, kind of influence the way people are thinking about some of these big events. But you also have that situation where the insider trading thing is going to be something that's going to be really hard to track, especially because you can bet on anything now.
Really hard to track and really, really prevalent. Rohit, I want you to weigh in on this because to Dan's point, he once said to me, nobody cares. I would argue lots and lots of people care. More people are certainly caring now than they did even 6 months ago, now that they understand what these markets are. But it appears nothing's going to get done in terms of regulating.
Well, let's explain to people clearly what this is. We want farmers, manufacturers who want to make sure that they can guarantee the price of certain inputs or commodities. This is good when it comes to markets, to be able to hedge the price of oil or corn or whatever it might be. And what we're seeing here actually is a lot of gambling. And there is a multi-million-dollar effort to really normalize the idea of gambling at the federal level and delete all the state laws that really protect against this. We've talked about this before. Eric Adams, the former mayor of New York City, you saw huge bets clearly coming from insiders, and something really goofy and weird. With Karoline Leavitt, the White House press secretary, there is a betting market on how long her briefing is, and she suspiciously went 30 seconds before the prediction market estimated it, clearly making somebody that she tipped big money. So I think we need to really clamp down on some of this political insiderism, whether it's warfare, elections, or even mundane things like how long the press briefing is going to be. Because, Stephanie, this is another vector of corruption that even if people don't understand, they smell it, they sense it, and they don't like it.
And to be clear, we do not know for sure that Karoline Leavitt tipped anybody off, but it is fair to say it does not smell